Hello and welcome to The Marketplace with me, Luqman Hariz, a show where we usually examine the hidden gems of the Bursa Malaysia, which are the mid and small cap companies. But from time to time on this episode of The Marketplace, we take a break and pause to reflect on the performance of the markets and discuss its directions moving forward. We also take a look at the performances of different areas of the market. In this episode, Barnaby Matthews of Macquarie Commodities and Global Markets Group joins me today. He's the group's head of equity derivatives for Asia. He joins me to discuss Malaysia's and Southeast Asia's derivatives market and what to expect moving forward. Barnaby, welcome to the show. First of all, how has the derivatives market leveraged on the increased or decreased volatility of the global markets over the past few years?
Well, we're actually we have been in a market of falling volatility. So for the last 10 years, volatility has been falling across global markets. And if you look at equity markets specifically, where I specialise, the volatility levels we're seeing in these markets now, in many global equity markets, is the lowest we've seen in 30 years or more. So what that means is there's very little risk priced into markets. And that impacts derivatives in a number of ways. So one very rudimentary way is that it impacts the price of derivatives. So if you look at derivatives such as options and structured warrants, the prices of these instruments have an element that's impacted by volatility. So when volatility is higher, the price of options and warrants are higher. When volatility is lower, the prices of these instruments are lower. So what that means is that when volatilities are very low, certain strategies, certain investment strategies become less attractive. So a common strategy in equity markets is to sell options, to sell volatility and earn a yield. This is not returning much in the current low volatility environment. Conversely, if you look at buying options or buying structured warrants, if you're looking to take a directional view or if you're looking to protect your positions, the price of these options haven't been this low in a very long time.
Well, you are the head of derivatives for Southeast Asia, for the group. So in this particular region, has the derivatives market presented unique challenges and opportunities, in fact, compared to its global counterparts?
Yes. Well, one of the main challenges in Southeast Asia is liquidity. So markets are not as large as some of the more developed markets in the world. And so lower levels of liquidity means that certain listed markets are not yet possible. So to give you an example, exchange-traded equity options haven't been possible yet in Southeast Asia. They've tried in a number of markets, and that's because there just aren't enough participants. There isn't enough liquidity to make the market viable. So what has worked are markets such as some of the OTC markets are working quite well, and markets such as the structured warrants market has also been successful because these markets use designated market makers to provide the liquidity for the investors.
So the lack thereof in this region is the cause of the lack of liquidity?
It's a combination of two things. It's the underlying markets are not as large and not as liquid, and therefore the derivative markets are not as liquid. But it's also because there's not as many sophisticated investors who use derivatives. You know, the percentage of active investors in Malaysia that use derivatives, for example, is a lot lower than a market like the US or Australia.
So apart from that, on top of that, what can Southeast Asia's derivatives market learn from that of developed economies?
So there's probably two main things I'd point to here. First of all, the regulation and the infrastructure in the market is a big factor, and the other is education. So looking at the first one, for many of the Southeast Asian markets, the regulation and the market infrastructure doesn't support some of these markets. So to give you an example, a number of Southeast Asian markets don't yet have equity index options. So Indonesia, Philippines don't yet have a listed equity index option, and that's partly because the stock borrow is not available in these markets. The derivative market, you need to be able to hedge the underlying, and if stock borrowing is restricted, it means that you can only provide one side of the market, so it's not an efficient market. So that has restricted index options in a number of these markets. Looking specifically at Malaysia, the equity index futures are liquid. But let's have a look at the structured warrant market. While the market has been successful, if you look at the single stocks, we can't provide we can only provide call options, so investors can only bet one way. They can't buy a put option over a Malaysian stock, and that's because of regulation which restricts the short selling of market makers.
How has the volatility of the Bursa Malaysia, and you take issue with this word because your analysis says that the volatility in the Bursa Malaysia is very, very low at the moment, but it seems to be very high from a layman's perspective, particularly since 2016. So how has this affected Macquarie's approach or derivatives business as in general?
Yeah, so perception can be quite different to reality. The volatility on the Malaysian stock market is the lowest I've ever seen it, and it's one of the lowest in Asia at the moment. I mean, global market volatility is very low, but Malaysia is probably near the bottom of that. So this impacts investor behaviour in many ways. Obviously, you can't use passive investing structures or strategies and just buy the index if the market's not moving. So investors turn to things like penny stocks to trade, try and get returns. They turn to structured warrants to try and boost their returns. Then looking at how it impacts the derivative market, so looking at the structured warrant market, we're no longer seeing investors buying trading warrants over the KLCI like we saw last year. They're now trading warrants over Malaysian stocks and many of the smaller stocks which are giving them volatility, or they're trading warrants over foreign indexes like the Hang Seng Index, which has a higher volatility and has been stronger.
So would you say a significant level of investor attitude or investors' approach is affected by misperception?
I think that's, you look at behavioural finance, I would say absolutely. I think the whole new field of study into behavioural finance is saying that, the theory is that many markets are in fact driven by investor behaviour which can conflict with the reality. Many people are saying that there is actually a lot more risk in the current market that is not being priced in. Volatility levels are extremely low. Risk is not being priced into equities or bond markets. Many are arguing that in the current environment it should be higher. Do you think that's the case in Southeast Asia at the moment? Look, I would say volatility levels look too low. I mean, the pricing in zero risk really. I mean, the levels of volatility in equity markets are extremely low, particularly in somewhere like Malaysia, where you have an election coming up. Volatility looks to be too low if you look on a historic scale. Yes. We'll return with Barnaby Matthews, Southeast Asia Head of Derivatives for Macquarie Securities Group Marketplace. We'll be right back. Welcome back to the Marketplace. I've been speaking to Barnaby Matthews. He's the Asia Head of Equity Derivatives of Macquarie Commodities and Global Markets Group. Now, Barnaby, pertaining to the derivatives market, the debate is that some say in a volatile global economy, the derivatives market could actually contribute more to risk volatility by doing things, for example, complicating proper risk identification. What do you say to this? I think you can say that leverage increases risk in the market. Increased leverage can increase risk and increase volatility. And many of the real crises we've seen in markets have come from leverage, but not necessarily from derivatives. The US housing crisis was predominantly housing leverage. You look at the rally in China stocks and subsequent correction, that was predominantly vanilla margin loans. Can derivatives contribute to this leverage? Yes, they can. But derivatives, it depends on the derivative, it depends on the market. We have actually seen situations where large derivative positions have actually contributed to decreased volatility. So you're looking at, in Hong Kong, we've had periods in the past where large structured product positions actually contribute to reduced volatility. But to the point on proper risk identification, I think there's been a huge advance over the last 5-6 years since the crisis. A large number of regulations have come out across markets, and they require increased capital be held by banks, They require banks and participants to report their daily derivative positions, including OTC positions. And they also require a significantly more margining in any derivative position. So the financial system is a lot more robust than it was 8-10 years ago.
Well, returns on traditional market instruments are expected to remain subdued. So will global investors embrace the derivatives market more going forward?
Well, there's two ways to look at this. I mean, I think if volatility stays low, yes, investors will look to things such as derivatives to try and improve their returns. But that being said, derivative investors like volatility. If you're taking a directional view, or if you're wanting to hedge your position against risk, this sort of activity increases when we have volatility. So I think we'll see the real pickup in derivatives when we see an increase in volatility.
What should we expect from the global, Southeast Asian, and also the Malaysian derivatives market going forward?
Well, I think from a volatility perspective, volatilities can't keep falling forever. They can't go to zero. So at some point we're going to see volatilities turn. Now, whether that's going to be a gradual increase or whether it's going to happen sharply on a single event remains to be seen. Many are predicting that the increase in interest rates is going to start causing stress in certain markets, and that will lead to an increase in risk and an increase in volatility. I tend to agree. However, the timing and the scale of that adjustment is very difficult to predict.
Any other catalysts we should expect that will catalyze that?
You've got geopolitical risk is another possible one. If North Korea were to do something silly, that would be an obvious catalyst that could impact global markets. Aside from that, I would say that the interest rate, direction of interest rates and sort of the US economy is look, the China economy is the other one, I guess, that's also hanging over people's heads. Can China avoid some sort of financial crisis?
Now, back home here in Malaysia, our national budget 2018 is just around the corner. What effects do you think this will bring? How will this reverberate in the country's financial markets?
Well, again, looking at it from a sort of derivatives perspective, I think political events typically cause an increase in volatility. So whether it's before or after the event, markets will usually adjust to the new information or anticipate price movements, and so it is very common to see increases in volatility around election events. And considering how low volatility is now in the Malaysian market, I think it is highly likely that you will see volatility increase around the election event. Which way it goes, you probably have a better idea than I would, but I can tell you, if you're looking to take a view, or if you're looking to hedge against a fall, it's never been cheaper to buy volatility, to buy an option or buy a structured warrant.
Right. Thank you so much, Barnaby Matthews, Asia Head of Equity Derivatives for Macquarie Commodities and Global Markets Group, talking about the derivatives market, the state of it, and what to expect going forward. And that's it for this episode of The Marketplace. Send us all your feedback on all our social media platforms. Download our app, as you can see there, available on Google Play and also the Apple App Store. You can also catch this interview on podcast. Simply search for Asra Awani or The Marketplace, wherever you get your podcasts. Luqman Hariz, thanks for watching. Have a nice day.